I've developed this message for our clients, and although I responded to you last Thursday night, I feel it's always important to give you as much information in order for you to be able to sleep well at night and continue to have confidence not only in the plan that we've created together, but the investments you hold in that plan. Remember, I'm here to deliver that confidence. Now let's face it, it's been a rough few weeks on Wall Street and on Washington, with all the debt ceiling discussions, the continued unemployment, the S&P downgrade announcement, and some data which might be interpreted as slower economic growth in the short term. This all has added pressure and extreme volatility in the stock market, not only here but globally. As you probably have heard from me in the past, the media seems to always overreact to things. But it's not only the media that's the culprit. You have other money managers, financial advisors, and the financial industry itself that way overreact as well. And let's face it, it's greed, pain, and fear that sell. But my job is to, and what you pay me to do is to make sure that you stay disciplined to your plan and to always keep you thinking in the long term. So what I want to make sure is to give you 4 pointers that are important to understand, not only during periods like this, but really during any period of time when dealing with investments in the stock market in order to protect your retirement not only now, but into the future. Now, I'm sure I sound like a broken record, but what I want to tell you is that investing is simple. It's people who have the problems. Now, first thing I want to tell you is to brace yourself, but also know that stocks are the best wealth creation tool known to mankind, but they are volatile in the short run. You have heard me time and time again say, I can't tell you where the next 20% move in the market will be. And you know what? No one can. And anyone who attempts to tell you is either delusional or a pure liar. What I can tell you is that it would not surprise me if the volatility continues in the markets as they sort out all the recent data and announcements. But remember, volatility means price increases as well as price decreases. You don't want to associate volatility with investment losses. One does not result in the other. None of you have 100% allocation in the stock market. We have worked together with you to set up a mix of assets that was developed specifically and specially for your needs. Okay? So secondly, with those assets, proper asset allocation and rebalancing of your portfolio are crucial to making sure that you're properly diversified within your risk tolerance. When constructing a portfolio, the idea is to always mix stocks and bonds that will maximize your odds of earning a good return. Mind you, I didn't say best return, a good return while minimizing risk. We take this pretty seriously as we already know your money is allocated prudently and across a global portfolio of stocks and bonds. In addition, it's important that your portfolio be rebalanced throughout the year, both when times are good and when times are bad. What does this mean? Well, right now the market is down. And if at the end of the quarter the market continues to be down, we will be selling your fixed income portion of your portfolio and systematically and with discipline buying into the stocks portion of your portfolio. Believe me when I tell you that no one is doing this since it's contrary to our very nature. Okay? Third, if you are not retired, you invest more. Everyone has learned, hopefully everyone has learned from the 2008 credit crisis that the time to invest is while prices are down, during these periods of uncertainty. This is the best buying opportunity we have had in over a year. So we encourage you to exploit that situation and take advantage of that. Don't follow the guy or the gal in the cubicle next to you. Continue adding to your portfolio. Fourth, if you're retired, and especially if you're one of our clients, you should not be concerned at all. Your income plan was put together exactly for times like this. Since we know that we can't control the markets, we don't allow you to take income from the market. As I have said before, we know that over the long term, exposure to stocks works very well. But there is a bumpy road, there are bumpy roads in between. So although you have exposure to the market, We have pushed that risk of those investments out over time, the next 15, 20, 30, even 40 years. In order for you to achieve a better reliability of income and also be better able to manage your emotions at retirement. However, it's always a good idea to review your withdrawals and income needs with us so that we have a better picture of your situation on a yearly basis. Finally, let's remember to stay focused. The job of every investor is to think long term. This, of course, goes against every instinct and emotion you will have because we are hardwired to not only panic, but to become emotional and only focus on the next 30 minutes versus next 30 years. The need to save for your retirement hasn't changed. And the need to maintain your income during your retirement, that also hasn't changed. So let's stay focused. So if you're still feeling a little unsettled at this time, I will tell you, don't be. Remember, your plan and portfolio was developed for the next 15, 20, 30, 40 years and is structured just for times like this. So let's ignore what's going to happen in the next few days. Even let's ignore what's going to happen in the upcoming weeks. Know that this country has, and even this world, has gone through a lot worse things than we are facing today. We have been through world wars and massive depressions. And yes, things are tough today, and they're crazy, and they're insane. But just like before, we've come out of it. Why? Because in the end, free markets and capitalism works. We know that life goes on. Entrepreneurs and companies will continue to find ways to innovate and make profits. So relax, enjoy your life, and we will help you continuing to be disciplined. Thanks.